is probably going to be February before you see this, but I wanted to just talk a little bit about, I guess, reiterate the conversations I've been having with a lot of clients lately. So over the last couple of years, really since beginning of 2020, we have been hit by a monstrous amount of uncertainty, right? I mean, the biggest one surrounding COVID, and then we had the presidential election. So lots of things that we didn't really know were going to come at us that came at us. This year, however, in 2021, I feel like there's a lot of knowns. We know COVID is still going to be around. We're probably going to learn a couple of more Greek letters, or however they're naming these things, because there's probably going to be some more variants, but it's probably going to continue to persist. We also know that the Federal Reserve is very likely going to raise interest rates. Matter of fact, there was a meeting yesterday and they said it's time. And so we're looking for maybe 3 to 4 interest rate rises of probably 0.25% each this year, but those are known. And just a quick bit on that, the Federal Reserve does not raise interest rates in a declining economy, right? They raise interest rates in a vibrant economy, one that's doing well, unemployment is improving, etc. So there's definitely going to be some volatility around rising interest rates, but it's probably going to be good volatility, not bad. And then the other thing that is, well, 2 more things. We've got the geopolitical risk that is already happening. We've got turmoil in Ukraine. Looks like that may turn into a war, or at least a skirmish of some sort. I hope not, but that might happen. There also may be other things that happen, China with Taiwan or the South China Sea. We haven't really heard anything from Syria or Iran lately. North Korea, I think I read, just shot off a couple of rockets, so that's probably going to pick up. And so we're just going to see a lot more stuff like that. We also, here in the United States, we've got midterm elections that are going to come up in November, so look for all of that to start getting super exciting, because we all love those political ads here in the summertime. And that's aside from kind of anything big natural disasters that might happen. I mean, some stuff might come out of left field. So just look for increased volatility this year, a slight rise in interest rates, but remember we're coming off of 0, so they're not going to go up that high. And just look for more geopolitical risk. But other than that, I think returns are, they're going to be very likely less than what they have been over the last several years. But companies that have strong earnings, they're making profits, strong balance sheets, typically dividend payers, these kinds of companies, the types of companies the majority of our clients have the majority of their money in, they're going to be fine. And just remember, if you're working with us, you're going to be, you're a long-term investor, and we need to look at these things as long-term. So when the market declines significantly and you're a long-term investor, this is a wonderful opportunity to add to the positions at cheaper prices. So I hope this message finds you doing well and that you have a great rest of your week.
Hey, thanks for making it to this part of the video. If you have, please like and subscribe so we can reach more people. If you have a topic you'd like for me to cover, please call us at 928-421-0002 or email me at derrick@rileywm.com. Thanks again, and we'll see you next time.